Today, we'll do a roundup of what the institutional analysts are saying about Tesla after their earnings report last week. We'll watch several videos, including Bank of America's John Murphy, who reduced his price target to $305 from $380. Piper Sandler is keeping their $400 price target with an overweight, saying the best case scenario just happened and the worst is behind us. Craig Irwin from Roth Capital has done an about face, now sounding more and more like a bull. Ives of Wedbush says he likes how Elon has done a pivot with his time at Doge and a new chapter begins. He's raised his price target back to $350 again. We have a great video clip of James Fishback of Azoria, who's saying it's a massive mistake for investors to not consider all of Tesla's future cash flows, just like what happened with the iPhone. And finally, we have Jed Dorsheimer from William Blair, who has a buy on the stock. To help me go through all of this is Larry Goldberg. Welcome, Larry.
Thanks for having me here, Herbert.
We have a lot. Enjoy with you going through all the institutional analysts, what they've said and how they think. Right now, looking like that they're getting to become much more bullish and positive despite a bad quarter. This guy is John Murphy from Bank of America. Let's listen into what he's saying here.
Tesla shares are down nearly 40% since Trump took office, and even if Musk cuts his time there, my next guest says the company faces a lot of hurdles. Joining me now is John Murphy. He's BofA's senior autos analyst. John, it's good to see you again. I always think, again, that it's brave when you cut or do anything with the stock into earnings. So I'm curious for your take today now that you've seen all the results.
So, Kelly, thanks for having me. It was a quarter that was a little bit better than people feared. It's why the stock is reacting positively. Elon turning his attention back towards the company, a little bit away from Doge, is also, pretty constructive. The company's miss was really driven by higher SG&A and R&D spending, which is reasonably controllable and has to do with investment in future products and opportunities. So I think a lot of investors viewed that as a reasonably constructive miss, if you will, and an investment in the future.
Interesting. So all of that said, your new price target is 305. We've seen a couple of upgrades, I think, after the numbers last night. In the rate 350, that's out there. What do the numbers say to you is doable for this company?
So, I think when we look at volumes, which I still think are pretty important for the company, they're probably going to be down at about another 1% to 2% this year, and growth will only be reestablished with new products. And I think this is really a key part of the story. And we upgraded the stock to a buy in April of last year, downgraded in January this year, largely because we thought a lot of the hype around the new product was in the stock. But I think the news last night, there was one real sort of negative nugget, at least from my perspective, is that the new low-cost product is going to come out by the middle of this year. But the reality is it's going to be likely more a stripped-down version of the Model Y and Model 3, which could really put those models at risk, and it's really not what we thought was happening. And Elon also talked a lot about not needing to have a lot of new product, and sort of an analogy for Nokia phones versus the iPhone, and the iPhone was something that's had a pretty static form factor over time, and he kind of alluded to not the need to really introduce a lot of new product. And I think that's kind of a real miss relative to what's needed in a consumer retail business.
Okay. Now, what do you think what he just said right there? He doesn't believe what Elon's saying. We should be making more cars.
Yeah, I mean, he said it all in the last sentence. It's a consumer retail business. It seems to be that he, like so many Wall Street analysts, see this company as a consumer retail business. And it's not going to be. So it's kind of like, saying Apple is a hardware company. And it's very funny because if you look at the iPhone sales, they kind of meandered along for the first year. They were not great for the first year. In fact, Microsoft kind of laughed at them. Why did they take off? The App Store. There's an app for that. The moment the App Store really became the App Store, it changed that company forever. And that company still lives on one real profit center right now, and that's the App Store. Yes, they do manufacture a lot of hardware. Yes, but what I'm trying to say is that he doesn't understand the move of this company into a completely new business model. So all that he has to say is, of passing interest to us Tesla investors who understand that we're not investing in a car company, and he's still rating it as a car company.
Called it neutral. He's disappointed with the new vehicles, and then he didn't like that Elon was saying that, vehicles are really like Nokia. You can keep making flip phones. What you need to now make is autonomous cars, and he doesn't believe it. Okay. Yeah. Doesn't see it. All right. Well, let's take a look what Piper Sandler said. They say something very different than what he said. Piper Sandler says best case scenario is what they saw following Tesla's weak Q1. Alexander Potter said, in our preview last week, we predicted that Q1 would be a non-event with the stock trading up slightly in the after-hour sessions. It appears our best case scenario has materialized. We think this is the best result that Tesla bulls could have reasonably hoped for. And the most important quarter takeaway is this. Tesla didn't hedge expectations regarding launching robotaxis or lower price vehicles in the first half. With less than 2 months until the end of June, investors can look forward to some interesting catalysts in the weeks ahead. This alone should be enough to keep the bears at bay, and at least until we have a better idea, the details of new products, as well as the scale and scope of the robotaxi launch. So they reiterated their $400 price target. Yeah, this is it's exactly what they had hoped for. This is basically just repeating what we just saw there. Yeah, that's a great comment. What do you think?
Yeah, Alex Potter has been a long-time favorite of ours. And, going back 5 years, I don't know when he gave his first interview to Rob Maurer, but I think it's got to be 4 years ago. And, he spoke with such knowledge of the industry in general. And he has this clear understanding of where Tesla is going. And he understands, what it's going to. This is such a contrast to Craig Irwin. It's nice that you show the two, one after the other, because it's one guy who gets it and one guy who doesn't.
Yeah, but Craig Irwin is hilarious. We've been covering him many, many times, and he was the biggest bear there was. He's changed his tune, Larry. You know that. He's just completely changed.
He's definitely changed his tune.
Listen to him now. Craig Irwin's take on Tesla's Q1 earnings, he said, is solid. So
wholeheartedly agree, right? I mean, we all knew this was going to be a terrible quarter. We knew they were probably going to mark their lowest margins in a few years. I mean, in the scheme of things, GAAP gross margins was 16.2 versus 16.5, given the size of the revenue miss. Pretty solid, actually. And margins are where they've had problems over the last several quarters, actually a couple years. And then you look at adjusted auto margins, 12.5 versus 13.1. Again, size of this miss was huge. So on the margin side, I would say that's strength, that's execution, and that's probably favorable mix. And then, I hear what you were saying in the previous segment. They were saying in their release, the Model Y lost production was a large part of the revenue dip in the quarter. So that means this is kind of sort of an operational transition and maybe less of the political volatility, even though politics have had a huge impact on the stock. There are some operating changes that have to happen at the company. So, there are some silver linings in here maybe, and we can look for the company update. This is going to be the first time they give us something they officially call a company update. We got mini car on the mat. We got robotaxi. We got Optimus. We got, AI. Gosh, they got so many things going on, and it's a story stock. It's not just a political story. It's a company that's executing and leading in some of these really exciting technologies. Stay tuned. I think we're gonna have a very exciting conference call.
Yeah, that was his prior to the conference call. Yeah,
executing and leading. Good. Craig is getting the picture.
He's getting the picture. It's great to see but it's just, I always have to scratch my head. Like, complete about face. Like, did somebody from the top, the CEO, say, stop it? Something happened.
Yeah. But that is how people become invested into Tesla. They oppose it because they have all these priors, and they come with these priors. They're in the auto business. They understand the auto business. This car doesn't have dealers, so it doesn't have penetration in the market. This company doesn't understand the auto industry, blah, 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 blah. And then suddenly, one day they wake up and say, wait a minute, this is not an auto company. And then suddenly they begin to understand. And so you get this huge turnaround, and Craig Irwin's not the first one. And he won't be the last.
Yeah. All right, next one is Dan Ives of Wedbush. So he's a Uber bull for Tesla. You and I have liked him a lot. But every once in a while, he did it last year in January, he did it again now, which is he gets very upset when he sees Elon behaving badly, or in his mind, not playing the ball of the perfect CEO. So he will write up something saying, hey, you got to, Elon has to act like an adult in the room, those kind of things. And so he's been saying the same thing the last week or two. And he claims that Elon needs to pivot out of Doge. And we knew that was going to come already, but here's Dan saying, okay, it came and he's happier. So here's him saying this. He said, Musk made a huge move forward as his time in Doge now winds down and he will be laser focused on Tesla again. Musk finally read the room and made a pivot, which helps remove the black cloud over Tesla. New chapter begins. Now he's going to raise his price target back to $350 with autonomous the focus. Significantly reduced Doge time was his main reasoning. We remind people, Elon said the large slug of work necessary to get the Doge team in place is mostly done. I'll continue to spend 1 to 2 days per week as long as the president wants me to. It's just thinking about his.
Dan Ives is one of the, he's called Tesla very well up to now. He always leads Tesla in terms of stock price. And he's been pretty good, dogged through the downturn last year. Earlier in the year, he did actually drop the price target and then raised it again when Elon had this really good call in the second quarter earnings call.
Right.
So, I have a very high regard for his judgment. And of course, he's very colorful, both in dress and in language, which appeals to me. I love the showmanship of it all. But under that showmanship, they do very, Wedbush do very in-depth analysis, and they really understand the space. If he's had any influence on Elon, I think that's a good thing. To the extent that he has, influenced Elon to come and tell the story of Doge at the earnings call, to explain that Doge is really, his job at Doge is pretty close to being done. And that went a long way towards reestablishing the price of the company, of the stock. And so, Dan has been able to resume his view on the stock. So we'll see. I still think that trying to call the price of the stock for a given date is a very iffy process. But that's a story for another day.
Mm-hmm. Well, Dan has typically been the guy, the institutional analyst that leads all of them else. And so he used to say $500 just a few months ago. And now he's down to $350. Piper Sandler's at $400. Then you've got John Murphy's at $305. What do you think about these numbers?
Well, you've got to understand the macro environment has changed dramatically. The macro environment, even 3 months ago, was very bullish. Right now, the macro environment is very bearish.
Mm-hmm.
And the macro environment is going to ultimately determine whatever the state of Tesla's business is perceived to be, it's going to determine the price of Tesla for that given perception of state. If that makes any sense to you. In other words, the macro environment, when it's really, really, bullish, is going to be a lot more bullish on the Tesla story because it's a story stock. And when the market is bearish, which it is now, analysts are going to be very reluctant to put, bullish numbers, even if they feel bullish about the stock.
Mm-hmm. So you feel like the 300 to 400 range is a decent number. You're okay with that? Yeah, for the next 12 months.
It's nowhere near the number that I have for the stock, but then the price, these analysts are calling the stock for this year or for this coming year. So they're looking out 12 months. I'm not looking out 12 months. I would be hard pressed to give you a price of Tesla stock in 12 months' time.
Yeah.
I'd have to give you a very wide range, somewhere between $250 and $1,000.
Yeah.
And I couldn't tell you what it's biased to, where the bias is.
Right. Yeah, I agree. Yeah, 12 months. It's just that, this whole thing is happening right when Tesla's about to launch Robotaxi and the robots. Now, granted, the next 6 months, the end of the year, it's going to be small, tiny pilots. And so it's fair. You were talking earlier about the iPhone, and that the moment the iPhone took off was not the hardware, it was when the App Store came on. And so that, like this guy, James Fishback, he goes back and reminds people about the iPhone again. So let's take a look what he's saying here. He's an investment fund called Azoria. He's also the founder of this Incubate Debate, open debate, I guess. I'm not really sure what that is. He said this: Steve Jobs announced the iPhone in January 2007. To value Apple in January 2007, not based on the prospect of this cutting-edge device, but instead an iPod sales, would have been a massive mistake for any investor to make. So remember, when you buy a company, you're buying all of its future cash flows, not just the cash flows for the next 6 to 12 months. That's right. Yeah, I like that. Clearly, let's listen to what he said here.
Announced the iPhone in January of 2007. To value Apple in January of 2007, not based on the prospect of this cutting-edge device, this new next-generation phone, to not value Apple on that, but to value it instead on iPod sales would have been a massive mistake for any investor to make. And so remember, when you buy a company, you're buying all of its future cash flows, not just the cash flows for the next 6 to 12 months. If you're buying Tesla today, you are investing in their AI technology. It is second to none. I got to tell you, I don't want to make a confession here on air, but I am trading on material, non-public information when it comes to Tesla. Not because I'm doing anything wrong, but because when I drive the car, I have information that 99% of investors don't have. For folks who want to invest with Tesla, I got to tell you, you got to just do this. Go to a Tesla dealership, schedule a test drive, and use the full self-driving technology. When you are done out of that car, you will want to buy Tesla stock with both hands and feet. This technology is magic, and most investors haven't fully appreciated that yet.
Wow. Finally. Well said. That's true.
It's magic, and most investors haven't fully understood this. That's the bottom line. I mean, I actually share his secret information, his proprietary information. You share it.
I did too.
Those who drive Tesla FSD are clear where they are. I mean, we are still getting negative press about FSD. We're still getting, these crazy people who say FSD is a killer, it's terrible, blah, blah, blah. And yet, those of us who drive it, we understand where it is. It's interesting that not before the Fishback piece, not one of those analysts spoke about where FSD is. Yeah,
that's a very, very good point. And then, of course, now that we have the national, framework for autonomy being pushed by, Secretary of Transportation, this is a big deal. We're getting to what we needed, right? A federal framework to allow this, now you got the technology improved to the point where it's getting close to really doing it. And then you got the regulation coming into place. Still, there's going to be doubters.
To license it nationally. I mean, you couldn't have prayed for more. If you were in the desert and you were going to pray for rain, you couldn't have prayed for, a better outcome. It would be like a flood was coming. That's what this means. I mean, this is very important.
Yeah, this is maybe. Do you think this explains a little bit of, the earnings call? Elon Musk says, I think that by the end of this year, personal use can use the unsupervised version of FSD. And I was going, what? So I get that there's going to be robo-taxi services in California and Texas. But for somebody like me living in Washington State, would I be allowed to use the unsupervised version? And he was saying, I can actually fall asleep in it. I don't know if this federal framework applies to that. But it might. Yeah. It does. So you do agree that he knew this was coming, and so that's what he was saying when he said this.
I don't know that he knew that was coming. It's impossible to. I mean, it makes sense that he would have
would
known the
know.
Secretary of Transport would have consulted with him in a meeting, would make a lot of sense. Or he may have, stepped back and said, look, I can't participate.
Right.
And maybe that was the case, but it matters not. What matters is that the Secretary of Transport has decided this is his priority, and he's going to strip away all the red tape. And this administration is more about stripping away red tape than they're about anything else other than immigration.
Yeah. Okay, one more. We have one more here. You got William Blair's Jed Dorsheimer. He's got a buy on the stock. Let's take a look at what he says.
Yes, William Blair's Jed Dorsheimer. Jed, why you have a buy in the stock? Why?
Well, one, I think that what Elon has built and done, and kind of moving to vehicles with a lower cost basis, is and on the energy side of the business, that's something we really like. And I think that people underestimated energy. And I think, quite frankly, last night was an example of that, where 14% of revenues, 25% of profits, which showed some resilience. So everybody knows that the auto side of the business has been under pressure. I guess it's debatable. Could we have should we have pulled the plug on that from a near-term trading move? Maybe. But I think, looking forward here, the energy business is operating better. Elon is stepping back from Doge to focus on Tesla, and you're getting news out of, de-escalation from a tariff perspective. And if that plays out, I think Tesla, has more upside than downside.
Yeah, I noticed from your coverage list, it's not a surprise you might be focused on the energy business, given you do focus on a lot of those companies in that general industry. We haven't talked that much about it. Obviously, a lot of the enthusiasm seems to be around robots and auto and robot taxis as well. What are your expectations for energy then as a percentage overall? Will it continue to increase in terms of the overall percentage of profits of the company?
Sure. I mean, listen, it does have tariff exposure. So that is a vulnerability here. But if you do get a de-escalation, we have said that the return on invested capital of Tesla's energy business is better than any of their other businesses from our perspective. And I think we're seeing that bear fruit. Our analysis revealed that the need for mega packs and battery storage is far greater than most expect, largely because the variability that renewables have pushed onto the grid, both domestically and abroad, has created a lot of problems. And so to fix some of those problems, you will see a need for more battery storage. So we're very bullish on that. In fact, I'm out here on the West Coast at an energy conference with a lot of policymakers here. And, hopefully, we'll see. But I think what you're probably seeing is some capitulation off of a bottom. The resilience, might even see some short covering that's driving this. But I think the resilience from energy is definitely the highlight.
Yeah, it would certainly seem to be an important component of the overall earnings picture. As for Musk coming back, I mean, you see it clearly as a positive in terms of his focus?
Yeah, I mean, that being said, there's brand damage. And so, we have to see how, I think this puts the auto side squarely focused on robotaxi and the launch of that. And that increases the risk profile. We're disappointed, quite frankly, to see that there is no Model 2. We were, quite hopeful that would fill a nice gap for the auto to complement what we like on, the energy side of the business. And so, if Elon can come back and help with that focus, then that's going to be a positive, and we'll see if this brand can return.
Yeah, and real quick on tariffs, you mentioned the impact perhaps on energy. And listen, even though they source a lot domestically and obviously manufacture domestically, what do you think the impact will overall be of tariffs on both autos and energy?
Oh, for the energy side of their business, it would be a clear negative. If you continue at this rate, that business will see the profitability hit. So that is a risk. So, we're clearly in the camp of we're monitoring, if Bessen's comments bear fruit and we see some de-escalation, that is a driver. But if it stays at status quo, that is a negative.
What do you think, Larry?
Well, William Blair is a firm I have a lot of respect for because they were very supportive of my previous firm, and they were very kind to me. But getting back to reality, his understanding and appreciation of the energy business is very positive for Tesla, because there's no doubt about it. This is a huge positive for Tesla. That energy business is going to double within the next year, and then it's going to triple a year after that. So we're going to see, up to 20 gigawatt hours per quarter, and then it's going to go to 30 gigawatt hours per quarter. So we're going to see, doubling from 4.5 billion a quarter to 9 billion a quarter to 14 billion a quarter. So we'll be at 50 billion within 2 years, 50 billion a year within 2 years at a very, very handsome margin, as long as they can solve the battery problem. So it's important to recognize that this is going to be a staple, growing contributor to the business. But I have to say, he's missing the main course. He's dealing with the dessert here. He's dealing with the hors d'oeuvres. He's not dealing with the main course. And what is the main course? It's robotaxi. And so, again, missing the key, he's going to the opera and he's listening to he's listening to the orchestra tuning up and he's thinking about the ending, but, he's missing the meat.
Okay. Fantastic. Yeah. I think the theme here is if you understand the energy business, you understand robotaxi business, and then you say, oh, okay, Elon is no longer going to be or reduce impact with the politics. I'm allowed now to dream and do these things. And then they start to be positive again. Yeah. And so that's what we're seeing. Institutionalists, thank you for walking me through and us watching these together. It's good every once in a while to do a roundup of how the institutionalists are thinking. Appreciate you, Larry. Follow him on his X account at Tesla Larry. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.